Welcome to Markets Now. I'm Michelle Rourke with Scott Varilek, Kooima Kooima Varilek. Well, we're back in the green in both grain and livestock futures this morning after a commodity-wide sell-off yesterday. Nice to see a bounce here, Scott. And let's talk about this cattle market. Certainly a disappointment yesterday. We couldn't carry through with a fourth higher day, but we're higher today. Are we going to continue to be able to recover in this market?
It's feeling a little better on the future side of things, and yeah, 3 days in a row, hoping for four. We'll take any one day in a row. I think at this point, it's been a market that we're just so beat up on, and it's evident that with that kind of flush, that there's just not a lot of interest in trying to buy or trying to sell, trying to take any position at all, because you've got an open interest number that's just staying on the very thin side. Funds are not interested in taking a big swing at this, and especially not that probably this close towards the end of the year. So still feels like we're going to have this sloppiness, but when it does recover, we're getting some nice rallies. So we're at least stabilizing, holding some of these recent lows. So maybe the panic can start to slow down, and we can have a few people start to call for a bottom, and maybe some fundamentals can turn in and try to get us back going in that market a little bit.
Yeah. Including cash trade. That's the one thing that's been a little negative for us, as well as the record weights that we have. When do you see us working through that? And what does cash trade look like it's going to be this week?
Yeah, we've got a mixed up mess going on there. I can talk out of both sides of my mouth when we're talking about this, because you got, some cash bids that are, 268 in the meat, a little bit of 168 bids live, if you can find it. Probably a few bids that are a little lower than that, but the bids stay on the lower side from what we're used to. I guess they're still on the decline, and we know we've got these record weights. So we're still fighting through that. We've had excellent feeding weather. It's just been amazing. And some of these cattle that ship, they're 150, 160 pounds over what your sheet said that they were going to weigh. So we have all of that extra weight to chew through. And usually that's a mess, and that's when the packer has the leverage. They can wait and let the cattle come to them. And that's what they've been doing and having a great job of it. But it's just kind of amazing to me that we've got this demand side, that $31, $32 choice select spread. So the packer margins are great. They want them, so that setup there says we should really be able to get these cattle moved quickly if the packer wants to come to the table. So you might get a really low bid, but then they're going to tell you, do you want them to go Monday, Tuesday, or Wednesday? So they're taking them that fast. So that's the both sides of my mouth that I'm talking out of there, because I feel like the setup is really going to help us get them cleaned up. But we've got a packer that's done an excellent job at managing the chain speed and knowing that the numbers are tight. And if they clean up all of these large cattle, then they're not going to have near as much to stand on. Because yes, still year over year, we're still in cow herd decrease. Yes, we had some bigger placements. I think that's because all the cattle got placed early compared to what they normally are, because the prices were so good. So I think that long-term outlook is still feeling very positive on the cattle. And that's why you're seeing some of these deferred contracts be the first thing to start to hold. We've got the problem up front, but I think the overall market feel is this, these prices aren't going to give up, and they want to stay pretty strong. So the buying is happening in the back. Got a little problem in the front. You'd like to be a cash-led, front-led market, but we just don't have that ability right now.
Yeah, certainly that was the structure that we had when we hit the record highs. All right, speaking of record highs, stock market into record high territory. Fed says they're going to start pulling interest rates down in 24. That should be somewhat friendly for the cattle market and for demand from consumers, right?
Oh, 10-4. Yes, it really should be a nice shot in the market, because you've got the record high stock market. You got a consumer that's feeling a lot better about things. I haven't heard the word recession in at least a month. We've been hearing that word for the last 3 years, and now it's got a little bit of a different feel to it. I think we've got a consumer that could be in better shape. Yep, it's holiday season, and the credit cards are big. I always hear that debate on the consumer. These credit card debt is just huge. And yes, it is. But we've also changed how we do business, because more things go to your credit card now than they used to. Your monthly bills, just everything goes on my credit card, and then you just pay that off at the end of the month. So it has shifted a little bit how we do business, but that was part of the reason why we had some of the break as well, was economy concerns, and that's always a worry. But one less thing we have to worry about is really going to help us out, I think.
Yeah, and hopefully it will also mean a lower dollar, which should help with exports, I would think.
Yep, lower dollar, and we're seeing that in the last couple of days. It's taken that news pretty significantly here with the move we got in the dollar, and that's going to help on exports on all the ag markets. And cattle, it's not really a market that lives on exports. We're net importers generally anyway, so I don't know if it'll have much effect there.
Hog market is up along with cattle today, and yesterday we flirted with contract lows again, but the lean hog index is finally looking like it might bottom. Is that enough to start changing the trajectory of this market or not?
It could. I don't have any fundamental data that says we got to turn this ship around real fast. We're still, flooded with pigs. It feels like we've got hogs coming in from Canada. They're coming in waves, and we've got at least steady weights over last week, but we're still 5 pounds over a year ago. So we still have that weight issue on the hog supply side, and we have a lot of them to chew through. So the fact that we're up $3 here today, I don't have a strong idea other than maybe we got to start looking at that dollar if there's going to be some China interest in looking at some of our pork, because we do have cheaper pork, and could be tied to that export possibilities.
Yeah, and weekly exports really weren't that bad this morning, a little over 28,000 metric tons. We also have December going off the board, so that maybe would leave February at a little bit of a discount here now if the index keeps moving higher too, though, right?
Yeah, Feb was carrying probably too much of a discount than what it normally would anyway. The market that's usually $2 higher over the D's, and D's is generally going to be the lowest month on there, but Feb was trading under that significantly here the last few days. So to see it come back and at least be higher than where the D's went off, I think that helps. Maybe that's scared some of the market enough to say, hey, let's get some of these hogs cleaned up. Let's keep them moving, trying to keep them gone. So with that attitude, that can help you get out of some of those larger weight problems quicker, because you don't see the dangling carrot down the road. There hasn't been a carrot dangling, so there hasn't been the incentive to try to keep putting weight on or trying to fight this market a little bit. So that probably helped us maybe in the short term there.
Grains got slammed yesterday by the Argentina news, the devaluation of the peso for one, but back up here today. And you mentioned the lower dollar, that certainly helps, but we're still watching South America. And today, how much of this is just technical buying?
Yeah, I think we've got, this weather issue to me is still a front story for me. We're never out of the woods, and we like to trade the markets and the rain forecasts. And it seems like, you'll get some rain and it's never enough. There's going to be some issues somewhere. So I think that weather premium still has to stay in the market and at least keep us in a range, even when we do have some of these large sell-offs, like with the political news and what's going to happen to the peso. And looking at that, at least Argentina doesn't have, a large crop to stand on anyway from last year. They had some growing issues last year, so it's not a large supply that is now available to come in and start moving. So I think there's a little bit of that, maybe the overreaction to the lower, pulling it back higher, keeping some of this weather premium in. And yeah, I'd say technicals could be part, because I don't think that these markets are ready just to give up and blow out of the bottom side. So it was a nice spot for some longs to try to enter the market there. But looking forward, we got a dollar that's moving a little weaker, and that could really help us in the export side of things. And that's what we need. We need some of those exports to pick up with the crop size that we have. And if this dollar continues to break, I think we'll have to put some more premium back onto these markets yet. So establishing a bottom, we'll see if they can slowly try to get an uptrend, started, but I just think that's going to take a lot of time.
Yeah. I said technical just because I think some of these markets kind of bounced off some support areas. So maybe some corrective buying. All right. Thanks for joining us. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.